Sunday, May 23rd, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to talk about how you need to hold on to your gold and silver for dear life. Of course, this is my opinion. This is how I felt for almost 20 years about holding gold and silver. And yes, this is like a part 5. I've been making these videos since 2018, seeing that some people get into gold and silver, they see the fluctuations in the fiat price, and they get, of course, understandably worried. Before I start, though, I like to make a few announcements. I am making my live stream tonight. I just needed to make another video because yesterday I didn't do a video. We had the Mike and Mario show, which I published yesterday. That was done Friday night with Mike, London time. Yesterday, I tried to turn back the clock. I'll talk a little bit about myself today. That will also help you understand why I am so much into having sound savings. So turning back the clock, back in the late 80s, early 90s, when I was still living in Switzerland, I had finished university. I started working for a small bank in Geneva, and I played a lot of golf. I've been playing golf since I was 15, but I actually improved when I started, when I was still at university towards the end of my degree. And then when I started working, I didn't play as much. I didn't have as much time. But before that, when I started out when I was 15, I used to play too much. So I got to a pretty high level in Switzerland. I got down to three handicap. I was a pretty steady 4 handicap. And I used to play a lot of tournaments in Switzerland, travel around Switzerland, play amateur tournaments. And a lot of the tournaments were 72 holes. So you played the first 2 days, 18 holes each. And if you played well enough, you'd make the cut and play 36 on the third day. So twice around the course on the same day. And I played quite a few of those. I made the cut quite a few times. And I didn't have a problem playing 36 holes a day, carrying my bag and everything. And I did that yesterday at my new golf club. And I didn't carry my bag. I had a trolley and didn't play very well. Yeah, my handicap is kind of doubled since 25, 30 years ago. It was tiring. I guess that's what age does to you. But anyway, that's what I was doing yesterday. Other thing I'd like to say, there's a lot of you out there who are saying that it's very hard to get gold and silver, not just in the US, but in the UK. And a lot of you know that I have a working relationship with Gold Investments. And I spoke to Oliver on Friday because he has plenty of supply of silver and gold, and he will deliver to you virtually the next day or maybe 2 days after you deal. And why is that? How come he's got the supply? Well, he explained to me that him and his family, they've been in the business since 1981, so almost 40 years now, and they have a lot of customers and clients. Yes, they're seeing a lot of people buying, but they also see people selling all the time, all existing clients that have been with them for 30, 40 years. So they always have a supply, and they also have a good relationship with a lot of mints around the world, and also a lot of dealers, other wholesale dealers around the world. So I've always told people, because I was asked a few years ago, where can I get gold and silver? And I said, do your homework, get the best deal, look online, but also consider Gold Investments. I have a promo code there, Monaco64. He'll give you a good deal. He'll take a little bit off the offer price, and he will even match the prices for the bigger dealers out there in the UK. So yeah, if you're having difficulty getting silver or gold, try gold investments. So now to the hold on to your gold and silver for dear life, part 5. And one of the reasons I'm so interested in inflation, so to speak, in sound money, in fiat currency, gold and silver, is because I grew up in Brazil. And Brazil, we've always had inflation, at least in the 20th century and 21st century. Yes, I grew up and no one really knew why we had the inflation. And it took me quite a long time to understand. And it wasn't at university where I studied international relations and economics that I learned the true definition of inflation and why inflation is not really caused by higher oil prices or higher I don't know, the mainstream media, they always blame something for inflation except the real culprits, which is government and the state. As Felix Sommeray, the Raven of Zurich, once said, inflation without the state or government is impossible because they control the money supply through the central bank, they impose legal tender laws, and they create this phony fiat currency out of thin air. But yeah, in the 70s, I remember the 70s well. I was growing up in the 70s. I was a teenager in the 70s. And there was a lot of inflation, not only in Brazil, but in the US and Europe. And the blame was OPEC. Blame the Arabs for raising the oil price. But no one ever talked about the inflation that we had from the Vietnam War and the Great Society, and the fact that Nixon closed the gold window, and that led to even more inflation of the monetary system. So by 2000, I'd been in the business. I was already in the city of London. I worked for 2.5 years in Geneva. I started looking into the Austrian School of Economics. And why did I do that? Well, because I read a book, I think around the turn of the century, 1999, 2000, called Atlas Shrugged by Ayn Rand. This is a new version. I just bought it recently. I want to read it again. Not that I don't remember the basic tenets of this book, but from reading this book, I realized what inflation was all about, what big government and socialism is all about, and I started looking into free markets. And that led me to look into the Austrian School of Economics. And they have a big tradition of sound money as well, of being a proponent of sound money. And by sound money, of course, I mean money of the market. And the market chooses whatever it wants as money, the soundest money. And over the last few thousand years, it's been gold and silver. So that's how I got involved. And so what I wanted to show people today is because I get a lot of questions from all over the world, because when we say that the dollar is going to collapse or continue to lose value, we don't just mean against other fiat currencies. We mean especially versus sound money. And I have viewers from all over the world, as I said, and they ask, oh, will the Singapore dollar do well? Will the Swiss franc or will the Aussie dollar do well? And what I have to say, unfortunately, is that none of these fiat currencies are going to do well versus real money, versus sound money. And they haven't been doing well since the beginning of this century, and I'll show you why. And I also have been talking about this even before I got involved on YouTube. I used to write a few things about markets and economics, and I used to have it posted on a blog that I had, and this was still while I was at work, so I didn't keep that blog because I didn't have the time. But there's a website that published a lot of the stuff I did, and it's called the Market Oracle. And I've been warning people since 2007 April 2007. There was a part 1 of this article, which I can't find, but this will do. So currencies, they're all sinking, part 2. So April 24th, 2007. So let's just go quickly through this article. It's not long. It says last December 2006, we wrote in They Are All Sinking about how our present monetary system is a dollar-based system and how it has evolved. We also noted how all major so-called hard currencies, along with the dollar, had been losing value against gold since 2001. In part 2, we will be giving an update on how the major fiat currencies are faring against gold at the present time. So I'm going to go through this, and then I'm going to go also through charts of the major currencies so you can see more visually how they've been doing since around 2007 when I wrote this article. We feel that there has been a great deal made of the demise of the dollar, while there is, on the other hand, a great deal that has been made of the $2 pound sterling and the $1.36 euro. Yeah, sterling got up to above 2. Back then it got to 2.11. Focusing on dollar weakness alone is, in our opinion, a mistake, because in the end of the day, all the major fiat currencies are being inflated, and as a result, losing purchasing power versus real goods, services, and assets. As gold has been the currency with the best track record for the last few thousand years, and as a result has maintained purchasing power, we find it appropriate to compare government-imposed currencies with the yellow metal, so government-imposed legal tender. So our latest calculations show that the dollar, the euro, the British pound, the Swiss franc, and the Japanese yen have continued to lose value against gold. Since we last wrote, the dollar price of gold has gone from 618 to 684 today, which is a gain of 10.68% for gold. Against the euro, gold has gone up from 472 euros. How you wish you could buy an ounce of gold for 472 euros, right? To 502 today, a gain of 6.35%. Versus the British pound, gold is up to 342. Well, now it costs 1,342. You have to add a 1 to that number. From 316, a gain of 8.23%. The Swiss franc has lost 9.15% as gold has risen from 754 francs to 823. And lastly, against the yen. And the yen is interesting because people say, wow, gold doesn't do well in a deflation. Japan has been in a deflation for 30 years, but it's not the case because gold rallied in this article from 73,000 yen to a present price of 81,100, or a debasement of 11.09% for the Japanese currency. As can be seen, talk of death of the dollar is only partly true. We feel that it is more appropriate to talk of the demise of the fiat monetary system, and with it, the death of all the currencies that make up the system. So there you go. So I'm going to put a link to this article if you want to read it. If you want to click on my name, you find all the other stuff in there that they published from me. So now we'll have a visual look through charts of all the major fiat currencies, and just to show you how they've done since 2007. Yes, of course, in dollars, we've gone from around 600 to where we're now, just below 1900, as you can see. But I like to focus more on the non-dollar currencies because I think it's important for people to realize that it's not just the dollar that's going. So here's the euro back in 2007. As you can see, we're trading around 500. We made an all-time high in 2012. So why was the all-time high in the euro in 2012 and not 2011? Well, because you had You had the European sovereign debt crisis when government bonds in the periphery were collapsing and gold was going up. Gold wasn't going down. A lot of people think when the bond market starts dropping and yields start rising that gold's going to go down, but it's not the case. So we had the same correction in the euro over the years, like the US dollar. And last year, of course, we made a new high, and that was around 1750. Yes, we've corrected as well, but now it's picking up again, as you can see. So the correction from last year, from the all-time high to the bottom in March, almost tested the old high from 2012. So now let's go to the price of gold in pounds. As you can see, back in 2007, you needed 1,000 pounds less to buy an ounce of gold. And then we made an all-time high in 2011, just below 1,200. And we went through the same bear market correction. And we moved quite strongly back in 2020. And that was because the pound was getting hit as well because of Brexit, all the negotiations. So we almost went up to 1,600 to 1578. So we had a big correction since then in gold, in British pounds. And as you can see, we almost tested that old high from 2011, just below 1,200. I think the low here was 1,217, but it's picking up again. We're back above 1,300. So now with the currency of a country that's supposed to be in the deflation for the last 30 years, people say, "Oh, you can't have gold in the deflation." Harry Dent says, "Hold on to your dollars, sell gold," but he's not looking at Japan. They're not selling their gold versus the yen. They're buying gold. So as you can see, we were below 100,000 yen, while we're even below 70,000 yen back in 2008. And it's been a pretty much steady rise. Yes, back from 2015 to 2018 was a bit of a flatlining, but we made another high here, almost 220,000. And as you can see, it's picking up again, gold. So the yen is dropping again. We're above 200,000. Now to the Swiss franc. Yeah, the Swiss franc is probably the best of the fiat currencies, but it's still a fiat currency. Switzerland got rid of half of its gold reserves years ago, but as you can see, in 2007, you needed about 750 Swiss francs to get an ounce of gold, and now you need almost 1,000 francs more. Yes, we made an all-time high last year, almost at 1,900. We corrected below the old all-time high, but as you can see here, we're breaking back above the old all-time high from 2012, around 1670. So now the Aussie dollar, I have a lot of followers and viewers from Australia. Yes, I'm sure you wish you could buy gold for less than $900 like you could back in 07 and 08. Yeah, Aussie dollar has been dropping almost continuously. Yeah, we had a little bit of a stabilization back in the middle of this the last decade, but last year we almost went up to 3,000, corrected, and now we're picking up again. Canadian dollar, same story, down around 700 back in 07, 08, and now way above 2,000. We've corrected as well. We didn't really get that close to the old all-time high, which was around 1860, and now it's picking up again. This is not just the dollar that's picking up again. The Chinese yuan, it's pretty similar to the dollar chart, as you can see, so it's doing virtually the same thing. And to finish off, the New Zealand dollar, as you can see, we got up above 3,100 last year. We corrected almost retested the high from 2011, which was around 2,300, and now we're back at 2,600. So yeah, the dollar might seem weak, but the other fiat currencies are weak as well versus gold. So yes, the dollar index moves inversely a lot of times to gold, but in the long term, all these fiat currencies are dropping versus gold. The dollar index as well has gone up from around 70 in 2008 to around 89 right now, and gold has gone from 1,000 to almost 2,000. So yeah, hold on to your gold and silver for dear life. That's my motto. It's for you to decide, of course, whether you want to do that or even whether you want to have gold and silver. But I think it's a good way to park your savings. It's not going to be debased by inflation. It's not an investment, but it may act like one when all the fiat currencies accelerate their move lower. And of course, this is not talking about the miners, gold and silver miners. That's another subject. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.